Assalamualaikum and good morning to Dr. Sabarina and all my fellow friends. We are from Group 4. Today we will present about purchasing cycle. This is our outline for the presentations. Okay, next we will proceed to the processes involved in the purchasing cycle. First, purchase order corrections. Second, budget checks and requests for the proposal. Third, vendor qualification and selections. Fourth, negotiations and purchase order dispute. Fifth, delivery and quality checks. And lastly, purchase order matching and closure. Now I will explain more detail on the processes involved in the purchasing cycle. The first step of the purchase order life cycle is creating a purchase order. When a purchase request is approved and authorized, it is converted to a purchase order. In case of multiply line item, each item will be transferred to a new purchase order. Next, budget checks and request for proposal. When the purchase request created, the finance team carry out a budget check. After this, there is a standard search for existing purchase contract. If such a contract exists, the purchase order will be sent to the respective vendor. If not, the request for proposal will send to the list of prospective vendor with the intentions to quotations for a product or service. And then vendor qualifications and collection. After receiving commercial quotes from the supplier, the purchasing team will compare their business requirement with the vendor proposal to arrive at the unified vendor selection discussions that is in the best interest of the organizations. It will conduct investigations and also seeks input from all stockholders. Next step, when a vendor is selected, it is time for contract negotiation. This is the time where supplier and buyer discuss and address issues that will be a better business relationship. Purchasing negotiation will cover delivery expectations, quality benchmark, payment terms, potential liability and risk, and change in requirement. When the negotiations is complete, the purchase order is forwarded to the vendor for approval. The vendor approval will activate a legal binding contract between the vendor and the buyer. Next, delivery and quality check. Vendor visually send an advance shipment notice to the purchaser when the order is shipped. This notice includes a shipping date, shipping agent details, tracking number, and a copy of purchase order and invoice. After receiving the product or service, the buyer checks the packaging slip and purchase order information. Then the purchaser performs a standard quality checks and notice the vendor or reject product in case of damages in the item delivery. In the last step, there are three important purchasing documents, which is the purchase requisition, purchase order, and vendor invoice. This document is important to verify whether the information is accurate or not. Once the three document match is complete, the invoice is approved and forwarded to payment process. The purchase order is formally declared as closed and stored for the purpose of bookkeeping and audit.
Hi, I am Aisyah and I will present about the source of document in purchase cycle. The first one is purchase requisition. It is to request purchased goods or services. The next one is purchase order. This document includes description, qualities, and quantities of good or service being purchased. The next one is receiving report. It is the report, the receipt of goods. Often, the receiving report is a copy of a purchase order with a quantities omitted. The next one is vendor invoice. It is the bill for the vendor. And next, voucher. It will serve as the basis for recording vendor invoice. Okay, next is purchases journal. It is used to record the voucher for goods or services. The next one is account payable subsidiary ledger. It is include amount owed to individual vendor. The next one is vendor statement. It is to represent the purchase activity with vendor. Next is electronic fund transfer, EFT or checks. This document is used to pay for goods or services. The last one is cash disbursement journal. This document contains columns to record credit to cash and debit to account payable and cash discount.
For journal entry, there are three types of transaction invoice, which is purchase transaction, cash disbursement transaction, and purchase return transaction. For the account invoice in purchasing cycle are account payable, inventory, cost of goods sold, various asset and expenses account, cash discount, purchase return, and purchase allowance. For journal entry, we will record purchase goods or service on credit or cash and discount received. We will debit purchase account and credit account payable or cash credit cash discount. Cash discount receipts actually again for the business. It also decrease the actual amount to the purchaser to pay. For record payment on the account payable, we will debit account payable and credit cash. And record return good to the supplier, we will debit account payable and credit purchase return and allowance.
Okay, next, flowchart of the purchasing process. Under the purchasing process, there include many departments. So that's mean the segregation of duties is really important in this stage. So first, the purchase requisition is get from requesting for the goods that they want. So they send to the purchasing department. Then the purchasing department will approve the purchase requisition. Then give out to the IT department. Then IT department will do the purchase program and then make a 4 copy of purchase order to give out to a few department. For example, the purchase order is give to receiving department. So the receiving department will do count and inspect. Then give to receiving and then do the receiving report and give out to the account payable. The account payable will compare invoice to purchase order and report receiving report. Okay, continue from the flowchart. So from the account payable, we send out to the IT department to do the update. So from the update, we get the cash disbursement report. From the cash disbursement report, will come out the input. The input will go to the cashier. The cashier will review the checks and EFT lifting. Then check is passed to the vendor. Next is internal controls. First, control environment. The foundation for the company when implementing a system of internal controls. Factors that affect assignment of authority and responsibility within the company. Second, risk assessment. Process of identifying or analysis the business risk that could arrest the company in achieving its objective. The assessment of fraud risk may help to identify the possibility of fraudulent reporting or loss of inventory that resulting from fraud. Third, control activities. Policies and procedures that help ensure the management's instructions are carried out and been implemented to address the risk identified in the risk assessment process. Example, segregation of duties, include authorization of transaction, recording of transaction, having custody of asset, and performing comparison or reconciliation. The fourth, information and communication. Internal communication ways by which information is spread through the entire that enables staff to receive a clear message from senior management about the importance of control responsibility and must take it seriously as well. Monitoring of control purpose to evaluate the quality of internal control performance over time, to provide reasonable assurance to the achievement of a company's objective, redesign the controls as control change over time. Next, risk area in the cycle. They have two, control risk and inherent risk. So, control risk is occur due to failure or limitation of a company's internal control. Review and redesign internal control system. Then element that will increase level of control include poor internal control system, improper segregation of duty, and documents are approved without management review. Inherent risk might occur in the financial statements due to the factors other than the failure or limitation of a company internal controls, such as type of business undertaken and complex business transaction. Industry-related factors that affect the level of inherent risk are adequacy of the supply of raw material, the level of stability for the raw material prices. If deals with many suppliers and price of products are relatively stable, level of inherent risk low. If rely on single supplier to supply a critical component, level of inherent risk is high.
Okay, now we move on to the important assertion and audit procedure for purchases transaction. The first assertion is occurrence. The auditor may be concerned about the purchase recorded but goods or services are not recorded or received, or maybe fictitious purchase occurred. So, the management need to do segregation of duty between account payable and disbursement function. The test of control is observe and evaluate the proper segregation of duties. Next assertion is cut off. The auditor may be concerned about the purchase transaction record in the wrong period. So, all receiving a report forwarded to the account payable department daily. The example of test of control that can imply is compare the date of receiving report with the date on the original purchase order or vendor invoice. Okay, for cash disbursement transaction, the assertion that can be used is completeness. The possible misstatement is cash disbursement made but not recorded in entities record. So for the control activity, management should review of vendor cash disbursement list and reconcile the daily cash disbursement with posting to account payable subsidiary record. The test of control is scanning, which is auditor can review and test the entity procedure for reviewing vendor cash disbursement list and entity reconcile procedure. The next assertion is accuracy. The auditor may be concerned about the cash disbursement payment recorded at incorrect amount. Therefore, the management should reconcile to EFT and check issued in the daily cash disbursement report. The audit procedure can be applied in scanning, which is review reconciliation independently by entities personnel. Okay, for the account payable transaction, the assertion is existent. The auditor may be concerned about the recorded liability and a valid obligation of the entities. So, the segregation of duty should be used between account payable and general ledger function. The test of detail, the example of test of detail is maybe auditor can vouch a sample of item from the account payable listing and schedule for accrual to voucher check or other support document. Or maybe auditor can obtain selected vendor statement and reconcile the vendor account. The next assertion is cut off. The possible misstatement is purchase transaction recording in the wrong period. The auditor may be concerned about the purchase transaction occurred in the wrong period. So the management need to ensure the proper purchase cut off take place. The audit procedure that can be implied is compare the date of a sample of voucher with the date of transaction recorded in the purchase journal. The background of the purchasing case. As the auditor of Thai Fight Manufacturing Berhad, have been assigned to evaluate the effectiveness of the internal control structure relating to the purchase and the payment system and to make the assessment of the control risk. Although the company has expanded over the years with more than 100 active vendor accounts currently in the creditor ledger, it is continues to rely on a manual system to process all purchase transactions. During the review of the study, you observe the following procedure that have been employed by the company in handling purchase and cash payment. Firstly, when the account payable department receive the credit note directly from the vendor, the account payable department ledger and purchases journal are updated, and the credit note is filled by the vendor name is alphabetical order. Next, the vendor invoice is received directly by the account payable department, where the creditor ledger clerk match the detail in the receiving report with those in the invoice, and also verify all calculation in this invoice. After checking that the check agree with the account payable balance, the general manager sign them and return them to the account payable department for the mailing to the vendor. The account payable department also prepare monthly summary of check issue, which is then used for updating the account payable ledger account. The first copy is sent to the account payable department and second copy is filled in numerical sequence. Checks are prepared each month for each vendor by account payable department.
A. Identify the major internal control weaknesses inherent in the present system. Inherent limitation of internal control include collusion, human error, and management override. No matter how well internal control are designed, they can only provide reasonable assurance that objectives have been achieved. Judgment. The effectiveness of control will be limited by decisions made with human judgment under pressure to conduct business based on the information at hand. Faulty decision making or human error may lead to breakdowns in internal control. For example, in the design the manual system to process all purchase transactions based on the question. Next, human error and mistakes. Even well-designed internal control can break down. Employees sometimes misunderstand instruction or simply make mistakes. For example, error may occur when calculating the amount of purchase order. Next, management override. High-level personnel may be able to override prescribed policies and procedures for personal gain or advantage. For example, senior level manager can require a lower level employee to record entries in the accounting record that are not consistent with the substance of the transaction and violate the entity's control. Lastly, collusion. The effectiveness of segregation of duty lies in individuals performing only their assignment task or in the performance of one person being checked by another. For example, the person who gives checks to vendor can collude with the one who record those checks in vendor's record to give discount from the entity.
For the next question, what the specific control procedure will you expect to find if the type manufacturer website internal control culture over the purchase and cash payment were effective? The answer is first, segregation duties. All are purchase responsible segment for the disbursement and account activity. For the example, the purchase order is prepared by the purchasing clerk, then they give the duplicate report to the account payable department. Therefore, there has a separation of duty between purchase functions and account payable function. Second, authorizations and approval. Authorization procedure and policies in the place for the ordering goods and service. Purchase order rests from the each purchase and authorized by the appropriate senior personnel. For example, after the general manager checking the cash and agree with the account payable balance, the general manager sign them and return them to the account department for mailing to the vendor. Thirdly, review and regular reconciliations. Purchase order and good received not are matched with the supplier's invoice. Based on the case, the vendor invoice is received directly by the account payable department, where the creditor ledger check match the detail in the receiving report with those in the invoice, and also verify all calculations in the invoice. Lastly, safeguarding. All the purchase order to input scan should be safeguarded. Store collect sign the goods received. Staff receives goods, check them to the purchase order.